The housing market has been on a roller coaster for the past few years, and recently there's been a significant shift. Rising mortgage rates are sending shockwaves through the housing market, and it's causing many to pause and reconsider their buying or selling decisions. So, what does this mean for the future of the housing market, and should you be concerned? Let's break it down. Mortgage rates have been climbing steadily, and if you've been following the news or even just browsing Zillow, you've probably noticed that the rates are now higher than they've been in over a decade. Just to give you an idea, in 2021, we were seeing mortgage rates drop to historic lows, under 3%, which led to a massive surge in home buying and refinancing. But now, with rates hovering around 7% or even higher, we're seeing the opposite effect. Home buyers are pulling back, and sellers are hesitating to put their homes on the market. But why are mortgage rates rising, and why does it matter so much? Well, the main factor driving these increases is the Federal Reserve's decision to raise interest rates in an effort to curb inflation. Essentially, when the Fed raises rates, the cost of borrowing money becomes more expensive, and that directly affects mortgages. If you're planning to borrow money to buy a home, you're going to face higher monthly payments, which makes purchasing a home less affordable. This is where the slowdown kicks in. Fewer people are jumping into the housing market with the same urgency as before, and the number of transactions is dropping. Sellers who may have been eager to cash out are finding it harder to sell their homes at the prices they expected, especially if buyers are getting priced out by higher rates. For those who were hoping to trade up to a bigger home, the math just doesn't work anymore. Even if they sell their current home for a good price, they'll be stuck with a much higher mortgage rate on the new one. It's not a fun situation for anyone. But let's talk about the bigger picture here. The slowdown isn't just about fewer transactions or slower sales. It's also about the broader impact on the economy. Fewer people buying furniture, appliances, or remodeling their homes affects everything from retail sales to employment in construction and home-related industries. It's a chain reaction. Now, I know what you're thinking. Does this mean we're heading into another housing crisis? Well, not necessarily. While rising mortgage rates and a slowdown in the market are concerning, the situation is different from the 2008 housing crash. Back then, the market was fueled by risky lending practices and people getting mortgages they couldn't afford. This time, people are still employed, and the housing market is not flooded with risky loans like before. The homes that are being sold today are generally in much better shape, and buyers are more cautious and prepared. But it's not all doom and gloom. While it's true that higher mortgage rates are making it harder to buy homes, they're also having some positive effects for certain groups. For example, higher rates are cooling down the frenzy that we saw in the market during the pandemic, when bidding wars were commonplace and home prices were soaring. Now that the pace has slowed, we're seeing a bit of price stabilization. While prices are still relatively high, they're not climbing at the breakneck speed they were before. That's a good sign for potential buyers who have been priced out. For sellers, though, the situation is more complicated. If you're looking to sell your home, the market is less competitive than it was during the height of the pandemic. With fewer buyers in the market, you may have to adjust your expectations and be more flexible with your pricing. Sellers who are in no rush may choose to wait it out, hoping for lower rates down the road. But others may decide that it's better to sell now rather than wait and risk a longer, more drawn-out selling process. So, where do we go from here? Experts predict that mortgage rates will eventually stabilize, but it could take some time. It all depends on how the Federal Reserve handles inflation and whether we see a shift in economic conditions. Some analysts believe we might see rates drop in the second half of 2024, but there's no guarantee. In the meantime, home buyers will need to be patient and possibly adjust their expectations when it comes to affordability and location. So while the rising mortgage rates and housing market slowdown may feel like a storm cloud hanging over the market, there's still some sunshine peeking through. Whether you're a buyer, a seller, or just someone keeping an eye on the market, it's important to understand the landscape and adjust accordingly. The housing market might be cooling off for now, but opportunities still exist for those who are prepared. If you found this information helpful, make sure to like, subscribe, and comment below with your thoughts on the current housing market.